What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 18th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a ton of things to talk about. We're going to be taking a look through cryptocurrency markets as altcoins have made a steady rebound over the last 24 hours, talking about the broader cryptocurrency space as we've seen yet another major exchange hack, as well as some complications in the DeFi space, and then outside of that as well, taking a look at traditional markets, and last but not least, diving in through not only the Clio platform, but also doing a sponsored news update for Somnium Space. So we've got lots of things to discuss throughout the video, but let's go ahead and start by diving directly into the market. So taking a look over the last 24 hours, Bitcoin is relatively neutral, but I have to say, guys, to be fair, back towards my, again, towards my bias in this case from the data and analysis that I can see in the market, altcoins are still holding momentum and strength. It doesn't matter if you're looking at price action, if you're looking at the broader indices like Bitcoin dominance, or in the inverse version of it, which is altcoin dominance. You'll see here, it's very clear here that people bought the dip, that altcoins are back in action. And if you look at pretty much any pair of a certain altcoin to Bitcoin, you'll see that not only the majority of the gains are probably recouped in this case from what we saw over the last 2 or 3 days, but along with that, we're now seeing some break to all-time highs, as we'll take a look at in just a moment in its Bitcoin comparative. So again, taking a look here at valuations, right? The bump up here in market cap doesn't seem that significant compared to the overall correction. We have about a $10 billion rebound here. The thing is, though, that most of this is coming in the form of altcoins. We're getting a little bit in Bitcoin. We're definitely not at the exact low where we were, but again, most of this, if you take a look here on the 7-day, right, you can see most of this is coming back strongly in altcoins here, right? So we're not that far away from the kind of peak exuberant highs we were at just the other day. And we can see this being reflected in Bitcoin dominance here, guys. There's a lot of people who were very confident. They were saying, "Oh my God, all the bulls have been blown out of out of their positions. Altcoins. That was a fun altcoin cycle, wasn't it? And in reality, we're still on trend. Nothing's changed." The squeeze momentum indicator, the MACD, the stochastic RSI, or our aggregated SMS indicator that takes all three into account on the weekly time frame has not changed. And in fact, we're still on a red weekly candle here. So if we take a look at the daily here, what was looking like it was going to be a significant recoup of Bitcoin dominance, possibly back up here to the highs, quickly sold off. That exact level we were watching the other day, where we had discussed, for some reason there's this weird thing here on the 5-minute that I've noticed, but we'll put it here at the hourly just to keep it simple. But we were basically talking about a general kind of price range where price was getting squeezed in this case. There was basically an ascending triangle here with a consistent range of resistance. Price level support was rising, and we broke through literally like a few moments, I think, before the video was able to get uploaded on the channel. But again, you guys know it takes a little bit of time to record, upload, edit, and do all that jazz. But long story short, luckily we were watching that level, and it actually broke through. So this actually means good news for altcoins, because it means Bitcoin dominance is declining. It means that people are taking more risk. And we can see here that we're continuing to roll over here, right? We're continuing to see a decline here. It seems as if the trend wants to continue with where it was, right? And we'll see, maybe that's not going to be the case, but altcoins have made a pretty steady rebound. Don't believe me? Let's just go ahead and take a look at some of the market leaders. Chainlink, right back up to all-time highs in Bitcoin comparative. You're discounting the Wixes in this case, where it's kind of sporadic, but long story short, it's holding up towards what would be an all-time high in the sense if it closed right now. If you were to take a look as well, across the board, Kyber Network, same exact case scenario, right back up near the highs. Basic attention token, recovering a good amount of its gains, not all the way back to the highs. And then along with that as well, taking a look at ETH, pretty much right back up to its previous highs. Right? So what does this show us here, right? When you have these significant dips here, from something like ETH going from 2,700,000 Satoshis to 2,400,000. And again, for those of you guys who don't understand this concept of Satoshis, I've had some people in the comments mention that. I usually like to stick to talking about Satoshis during an altcoin cycle, but I'll explain what that is. So Satoshis are a measurement. It's a measure of 8 decimal points, right? And it's basically saying, how much Bitcoin could I get for the specific asset that's on the left? So if I have 1 Ethereum, how many Bitcoin can I buy? Right? So if we had a value of 1.0 here, this would mean that 1 Ether would be equal to 1 Bitcoin. Probably not going to happen, but we could very much see this go from the current 2,745,747,000 Satoshis up to 4 million Satoshis. 7 million Satoshis. Depends on whether or not ETH becomes more valuable compared to Bitcoin. So if Ethereum to Bitcoin here is growing larger and larger, this means that Ethereum is outpacing Bitcoin. Okay, you can buy more Bitcoin with your ETH. So that's the general concept, and I'll refresh that from time to time. But hope you guys get that. It basically it's a good way of measuring whether or not you should be exposed in one asset or the other. Plain and simple, right? And it's just like looking at standard prices. You use support and resistance. You look at price levels, right? So anyways, I've seen some people have some complex time getting that. But back to my point, without rambling too much, again, this is the kind of confidence you want to see here to signal that we are in an altcoin cycle, when people literally within less than a 48-hour period come back and buy the dip and push it back to all-time or relative highs in this case, right? So anyways, I don't want to do too much individual TA. We've got a lot of other things to talk about today, but that's a very, very important lesson just to take into mind here, right? To keep in mind here that, don't get caught up on what happens on the day-to-day. Don't FOMO, don't FUD, don't have a fear of missing out. Don't have fear, uncertainty, and doubt and just sell your whole load and position. Look at the trend, guys. SMS still tells us we're good. We're back to another green week. Looks like we're set to test up here towards 4 million Satoshi sometime in the coming weeks. I'm excited for that. So anyways, we're going to talk again about probably the biggest issue that's holding back the cryptocurrency space, and that is people's willingness to be able to deposit money on centralized platforms. Plain and simple. It's a big reason why I'm a big fan of DeFi. It's the reason why I'm really big on mitigating trust in any way, shape, or form. Utilizing platforms that remove a lot of centralized control. I care about being able to have control over my keys. I believe it's important as well for us to be able to access services while also still managing our keys, at least to a degree, at a bare minimum. And this is one that was a pretty expected candidate to eventually exit scam in some degree. This is Fcoin. Now, Fcoin, it's almost like FU coin at this point, but seriously, guys, this is no laughing matter at the end of the day. I mean, it's something we can make jokes about, but over $130 million of Bitcoin are no longer on the exchange. And I'd like to say it's just 130 million, but there's a variety of other cryptocurrencies people deposit on the exchange. So it's another, yet again, massive exit scam in the cryptocurrency space. Rather than a hack, you have to not only worry about people hacking an exchange and hacking the storage of that crypto, but people exit scamming as well. And people just literally saying one day that I'm going to take the money, I'm going to run. And that's the thing you have to realize. The very powerful thing about crypto is the self-ownership aspect. But the moment that you sacrifice that discipline and that responsibility of ownership of those keys, there's a lot of responsibility that comes. You are also giving up absolute access to your money. And you're going to have to hope that they are going to give you the ability to withdraw it back. Take that into mind, guys. For those of you who are new to crypto, I think a lot of you who are time tested, you know this, right? But as much as I'm fine with using some exchanges like Coinbase and Kraken and Bitstamp, there's a lot of other good players out there. When it comes to no-name Chinese exchanges that are not working under any regulatory framework, that come and go overnight, that are offering, as they were, this weird idea of fee mining, which I warned about as far back as June of 2018 as the new kind of scam in the cryptocurrency space to lure people in to deposit their money on there so they can eventually exit scam. You have to stay away from these things, because if something's too good to be true, it usually is. So in summary, right, as a lesson here, right, don't just put your money anywhere, and ignore these lucrative concepts of things like transaction fee mining. To those of you who may not know what this was, you can feel free to watch my video on this. It was basically this concept where an exchange could start to share its fees with its users, and if you owned a specific token, you would basically get a portion of this fee. So basically a security in a sense. It's a stock, right? You're basically getting a share in Fcoin's profits as a business. And the reason this screamed a scam for a mile away is Fcoin shouldn't be able to do this without registering a proper security. And second off, it was a no-name exchange overnight that was processing more volume than Binance. Seriously? we need to have better due diligence, guys. And again, I'm not trying to just say I call it and stuff. There's a lot of other people. We need more people in the space calling this kind of BS out, because it's hard to spot it on the surface level sometimes. But use your street smarts, guys. Stay away from this stuff. And I know most of you are already doing that. This is something that happened over a year and a half ago, where I was calling this out when it originally just kind of started to launch in early 2018. Now, in the DeFi space, there's been a little bit of trouble too. But I gotta say, guys, the sheer level of criticism on the Ethereum space here over the last week with this event throughout Valentine's Day that we saw during ETH Denver, where people basically, long story short, there was an abuse of the flash loan system on DYDX. We'll get into how it actually worked and stuff. That basically allowed someone through a variety of DeFi protocols to basically run away with some money. And it was so small, though. It was so insignificant. It was I think a few $100,000. So I just gotta say, the sheer amount of silence on this, a centralized exchange, and the sheer amount of criticism for a new emerging space that reduces or minimalizes trust is a little bit biased in nature. So I got to say that was one painstaking thing that I had to witness over the last week through crypto Twitter. It shows you how people are very eager to criticize either protocols that are exploring or projects and groups that are exploring new things and trying to innovate towards the initial goals of the cryptocurrency space, and then also as well when it's a competing protocol from your cryptocurrency. So anyways, it's just one thing I picked up. But I want to go ahead and talk a little bit about how this actually went about. So there was basically someone who had walked away and made a lot of money off of a protocol known as BZX, okay? And it wasn't just BZX that was responsible. It's a whole consortium of different things at play here. But again, I want to go ahead and talk a little bit about how this attack went down, okay? So I want to explain it step by step. It's a pretty interesting case. And this person basically showcased that there's a key issue here at fault with some of these DeFi projects. So let's go ahead and talk about it. So first off, someone took out a flash loan on a platform known as DYDX, okay, of 10,000 Ethereum. Now, what does this mean? It means that someone took out a loan, in this case, and they were able to borrow over 10,000 Ethereum. So they had some collateral of some sort, right? So they're able to borrow up to 10,000 Ethereum. Now, they took a portion of this Ethereum, 5,500 Ethereum, and brought it over to Compound. Okay, so they put this onto another platform where they used it as collateral to borrow even more money. And what they used that money for was to be able to use it as collateral to acquire wrapped Bitcoin. Okay, now wrapped Bitcoin, for those of you who don't know, it's an ERC20 token that represents a Bitcoin. So one WBTC would resemble one Bitcoin, and of course you can have fractions of one, but you get the point here, right? So basically they had locked up the Ethereum and were able to get 112 wrapped Bitcoin, so the equivalent of 112 Bitcoin. Now they took 1,300 of their leftover Ethereum and sent it to a platform known as Fulcrum. And this is the BZX protocol. So Fulcrum is basically a margin trading platform that allows you to build margin-based positions through a smart contract in the Ethereum blockchain. It's a really cool platform. I've traded on it personally. I love the user experience. It gives you a wide range of different margin-based positions. It's a fun platform. It really is, and it works. I've made trades on it before. I made one on Chainlink and turned a profit on it. There's a few different ways you can go about it, but long story short, you can see here that he put 1,300 Ethereum on a Fulcrum P token SETH BTC 5x play. Now, this is basically, when they put it in English here, it's a 5x short position against ETH to BTC. So what this is saying is that when you own this token here, right, if Ethereum goes down 1% compared to Bitcoin, as we just took a look at the ETH and BTC pair earlier, this would mean that you're going to be making 5x. In this case, you're going to be making 5% for every percentage decline in Ethereum compared to Bitcoin. So if it goes down 5%, you're making 25%. Pretty simple, right? So this person placed a massive bet on Ethereum going down to Bitcoin, right? So he has an incentive in this case for Ethereum to go down. Now, 5,637 ETH that was borrowed was then swapped to 51 BT or wrapped BTC through Kyber Swap's Uniswap reserve. And this basically was, imagine it at the end of the day, let's say a market that's processing $1 million worth of transaction for this pair, or not even that, a few $10,000, $100,000, and then this guy comes in with like millions of dollars saying, I need to sell Ethereum and I need to sell it now. Give me all the rat Bitcoin you got. So he got 51 rat Bitcoin in this case, which saw massive price slippage. Basically said, give me all the ETH, and he bought the entire order book. And that caused the price of Ethereum to decline dramatically because he was paying way over for a portion of some rat Bitcoin. The attacker then swapped in this case 112 of the rat Bitcoin that he got from this loan originally. This is not the ones that he bought. He basically took the 112 rat Bitcoin he borrowed from Compound and swapped it out on another DeFi protocol, Uniswap, for 6,871 Ethereum. So he basically took upon this opportunity, right, to get back the original Ethereum, and this actually netted in an actual profit in the end. So through using a variety of protocols and through using the oracles that in this case basically Fulcrum is using to pull price data in this case, he was able to make a massive profit on Fulcrum and be able to take those profits and go back and be able to, at the end of the day, pay back his original loan of 10,000 ETH and walk away with a steady profit. So this is how it worked. And in the end, he netted 1,193 Ethereum worth nearly $300,000. So again, what does this show us here? Well, we've got some issues with discovering price. It's probably not good in this case to have one specific price feed. And along with that as well, it shows us that decentralized exchanges in pair with these margin platforms where people are trading with 3 or 5x margin, it shows the issue when there's a lack of liquidity on the base protocols. Right? So this is very, very important here in the sense of decentralized exchanges. There's a few problems at play here, but I think at the end of the day, again, this is something that's going to happen. It's going to happen a little more frequently than I think what we've seen before because DeFi is new, guys, right? It's going to take a year or two to really work out the kinks here. And eventually, once they get worked out, once we have better oracles and price feeds, once we have better price discovery, once we have more liquidity on decentralized exchanges, things like this won't be as easy. But they can happen, okay? So I'm very interested to see what's going to happen here. If you guys want to learn a little bit more as to how it actually operated, I recommend you read Peck Shield's analysis here on how it actually worked. He's got a good little diagram here. But all in all, that's enough for talking about that. In the sense of equities, I want to go ahead and dive through equity markets real quick. Broader markets right now, taking a dive well over around 1% on average. If we take a look across the board here, U.S. markets down about 0.6%, whereas Asian markets, for example, the Hong Kong indice, Hang Seng, the KOSPI 200, Korean indices down 1.6%, China 8 shares down 1.4%. What's leading markets down? Probably continued slowdown from some of, not only from the stemming from the coronavirus, but along with that as well, because of the coronavirus, the slowdown in economic activity. A lot of large players like Apple that have come out yesterday and claimed very clearly that they are going to be missing their earnings expectations. So again, this is a good signal here of the global economy slowing down a lot of global trade and a lot of activity. Now, one thing I want to talk about here, and just kind of ignore the short-term moves here in the market, is taking a look here at a lot of the things that are going to explain why we've seen this kind of record rally in the NASDAQ, why tech stocks are just going parabolic. Well, it has to do with mass, both retail, so everyday individual traders, and also institutional traders, so mass retail and institutional traders, speculating to no avail like we've never seen it before. One way we can tell this is that this, for the first time in over 40 years, investors have their shortest cash position in 40 years. So what does this mean? It means that as an allocation of someone's portfolio between a wide range of basketed investors in this indice, for the first time in 40 years, we are at our second lowest level, where only 7% of people's portfolios are in cash. 7%. That is insane. That is unheard of. Where just a couple of years ago, the average was in a ballpark of somewhere between 15 to 20%. We're now at 7%. I mean, this is really insane, guys. This is fascinating stuff. And the lower and lower this goes, it screams to the fact that people have been chasing assets. They've been chasing a yield because they know central banks are printing money. And we'll hit on that point in just a bit. But you can see here during recessions, there's a spike back up. People go back and they retreat back into cash positions. So this is a very, very nice diagram here. I love this chart. It again shows us the state of just how much we're in an asset bubble. I mean, compare this back to 2007 and 2006 when property markets were overexposed, right? At least we had a decent cash position, right? And along with that as well, on Sentiment Trader here, a good chart showing us the amount of E-Trade darts in this case. So this is daily average revenue trades, and this is a way to measure retail traders. So retail traders are playing a big role as they do with the peak of every market cycle. And we can see here that we have a record amount of people over the last few decades who are retail traders trading and speculating in markets. So we have an explosion in activity here throughout 2019, going into 2020. The number is nearly doubled in this case. So we have twice as much retail speculation. You've been seeing this through the growth of apps like Robinhood. You've been seeing it on these new platforms like E-Trade and Charles Schwab offering zero commission trades. So in this case, it's leading a lot of people to just speculate willfully. And they think, well, there's no cost to me trading. Well, there is, because eventually markets don't just keep going up, right? And the thing that's not going to weigh you down, the thing that's going to weigh you down is not commissions. It's going to be the overall equity market. Now, this is the overall chart here. The other one as well that I want to talk about is another sentiment trader chart here, which is the total calls bought to open minus total calls sold to close. Now, taking this into mind here, it's basically saying the overall amount of newly bought calls in this case. Calls are like an option betting on an upward swing in price, minusing the old calls. So basically people closing their positions, right? So people are selling selling to close in this case. They're executing their options. And a lot of people are not executing their options in this case. So we have this over swath here of new options coming on to levels we have not seen in history ever before. And it shows us the rampant kind of confidence and speculation in the market. Again, very .com-esque in the sense of the kind of activities that we're seeing here. The rampant speculation, the betting that it will never go down, that it can never go down, right? And this is, again, all riding off the back of the Fed, rising its balance sheet, signaling that it's going to do anything to keep this expansion going. So people just keep propping money into it, right? So again, am I saying we should bet against this? No. Right? I'm not saying that I'm going to be shorting the market anytime soon. I would never short this on a month-to-month basis where it's green consistently. Sorry, it's not my business to short that. I don't like to bet against that. But I will say this: we're just about a little under 300 points away from the Nasdaq reaching a double of its .com highs back here from the 2000s, in the 1990s. The risk to reward here, guys, is not favorable whatsoever. Plain and simple. I can tell you, since we've taken our position back here, since the summer of 2018, where we've been bearish on equities, or at least I've stayed clear of equities. Not really been bearish. When monetary policy flipped, it was pretty clear that these markets were going to go up. But for me personally, I've done much better being exposed either in my cryptocurrency positions, which have been placed in over the last few years. But along with that as well, you'd still be better off in gold and silver over the last coming months, right? So, the last past few months and the last year and a half. So that's an important thing to note as well, right? Equities have done great. They've had one of their best records in a very long period of time, but equities again are getting way too expensive for me to find any decent value in the market. Anyways, you guys know I could probably ramble on about this for ages. All in all, though, good news is that cryptocurrency markets are still the best performing asset class this year, and they have been over the last few years in most cases as well. But I want to go ahead and, speaking about cryptocurrency markets, dive a little bit deeper into our partner Clio and talk about some really interesting ways we can get more creative or more detailed with building out strategies in the platform. Now, for those of you who haven't seen Clio 1 yet, Clio 1 is a platform that allows us to be able to build trading strategies without having to know a single line of code. And you can get really complex with it, or you can keep it relatively simple. But in today's video, we're going to talk a little bit about how we can to actually go about being a little bit more specific and utilizing certain indicators in ways that we haven't discussed before. So, for example, one question that we've gotten a lot, not only generally in the Clio community, but also in the comments of our videos, is whether or not you could utilize a similar indicator with different numeric values in the same exact win condition. And you actually can do that. So I'll do a good example here. You guys probably know about the exponential moving average. If not, you probably know about moving averages. It's a variation of the standard MA. But in this case, we're going to use an EMA. And in this case, we're going to use a scenario where one is crossing the other. So we're going to do the 20 EMA and 100 EMA. So this is basically, as you guys probably know, it's taking into account the last 20 candles and the last 100 candles for these two indicators. Now, when it creates this condition here, right, we have an EMA crossing up against the EMA. But how do we specify that we want the 20 EMA to cross above the 100 EMA? Well, we can do this very simply. We simply come here and click on the individual three-letter indicator here, the EMA. And this is going to allow us to change some values here. Now, the good news here is we actually don't have to change anything on this first one because we have our specified period here of 20 candles. But for here, on this second EMA, we're going to change this value to 100. And as simple as that, you just go ahead and click off of it. And now we have the 20 EMA crossing up the 100 EMA. So that when we get this cross here, it's going to basically issue, in this case, that we purchase a specific asset that we specify here on the right side. So very simple here, right? Not complex at all. And along with that as well, we can do a few other things as well. We can also do different time frames as well. So let's say, for example, the RSI, right? We want to, again, do another duplicate of utilizing the same indicator. When the RSI is crossing up against the RSI, and what we can do here is we could specify maybe on a time frame of the 1 hour, maybe the 1 hour is crossing over the 4 hour here on the RSI, right? So when the RSI on the 1 hour is crossing up against the 4 hour RSI, this might be a sign in this case that momentum is kicking in, or maybe an initial sign that we want to place a trade, or maybe we've just seen success in this, right? And in that case, we could utilize this. And another thing as well is we can do it on a variety of different assets in this case as well. So if we want to place a bet of some sort, there's some correlations that people find in the market. We talked about our Litecoin and Bitcoin strategy, things of that sort. But one thing that's common as well is that a lot of people spot, for example, the comparison of EOS and Ethereum. And they usually see that when Ethereum has rallies in this case, EOS tends to have bigger rallies and shorter corrections for the most part. So in doing this, we could also add another rule in this case, right? When, for example, maybe Ethereum, right? So ETH, maybe we could do Ethereum USDT, or no, actually we're going to do it to BTC here. When ETH BTC is up by, for example, maybe 2.5% in the last 4 weeks, let's actually go ahead and modify that condition. I'm going to go ahead and make that when it's up by, let's do a certain amount of value here in this case. We'll do 10% in the past day. There we go, we got our condition. Then in this case, we go ahead and we could, for example, maybe buy an asset like EOS in this case, right? We can add our asset, go ahead and do EOS to BTC, and we can go ahead and use 100% of our balance just to keep it simple. Set a stop loss. Again, this could be completely subjective to what you guys want, but I would say probably give it a good amount of room, something like 20%, and then take profit at maybe 100% market price, right? So again, there's all kinds of stuff here that we can utilize. Again, we can get really creative with strategies, guys, and we can trade a multitude of different assets. We can trade indicators to indicators here. There's a lot of interesting ways we can go about utilizing the Clio platform. But again, it's really about how you want to go about it. And the major thing to take away in all of this, guys, is don't be fearful that you're going to make something that's unprofitable, because you're not deploying anything, right? You're just testing out the platform here, getting your feet wet, seeing what works and what doesn't. And over time, you're able to go through the back testing and see where you remain profitable, where you're able to get even more profitable, or when you might want to backtrack and see where you went wrong if you see a decline in profit, right? So it's all about experimentation. I really like that about it. Now, I want to go ahead here and talk a little bit about our project. Again, this is a quick update on one of the previous sponsors we had on the channel, and that's Somnium Space. Now, I've gotten to know Artur, who's the founder of the project, and I've gotten to really know about Somnium Space over these last couple of months as I've kind of kept up with the project and seen how it's progressed. And not only is it preparing for its official mainnet launch, which is really exciting here. They're launching actually in 2 days. So I'm excited for Artur and all the team here in this case to actually finally bring this product to life here. It's basically, for those of you who weren't able to see the previous video I did, it's a virtual reality world in this case. A persistent reality world in this case that's loading constantly in this case, that you're able to interact with other individuals, you're able to collect digital art, and those digital art pieces are stored on the actual Ethereum blockchain in this case as NFTs. So you can have real world proven ownership of certain digital assets. You can place them and be able to showcase them in these virtual worlds and interact with different people in these virtual realities. So I think that it's really cool. I'm really happy to see that they've launched. And not to mention as well, they're actually launching their own token within the game here. So this is the base currency for the Somnium world. It's known as Somnium Cubes in this case, or Space Cubes. And they recently launched this alongside their already successful raise for the initial land offering they did, where they raised up to $200,000 in Ethereum to help self-fund the project, right? So in this case, it's a really cool thing to see that they're launching their own in-game currency for this virtual world. I think the concept of NFTs and in-game currency become more and more real the more realistic VR gets. And the more you can actually have proven ownership in some way, where there's not just a mass creation of digital collectibles, that there's a specific finite amount, and people can confirm and verify that, not only through these marketplaces, but on these blockchain explorers, where you can prove on the Ethereum chain that there's a limited number of these assets. Now, the cool thing is that it's going to be basically where you can actually use Somnium Cubes on OpenSea. So OpenSea is, if you guys don't know, is like the big platform for NFTs. So you could go on here and you could use some of your Somnium Cubes to be able to buy maybe specific land in the game. Maybe you could use it to buy certain NFTs. There's all kinds of interesting things that could happen here. Now, another thing as well that's important to note as well is that over the last few months, they've also made it they basically made it where every user generates structures real time when you're utilizing the world. And this is a pretty big breakthrough in the sense of not having to load a new block or square here. A lot of the kind of virtual world experiences in the sense of blockchain projects are just a lot of VR games and worlds. You basically have to load a new world in this case, and you have to wait patiently for it to load. But in this case, it's as if you're going through a landscape where basically the render distance starts to open up as you move around the world, or you start to see the mountains as you get closer and closer, or new buildings or new individuals. So it's basically, in a sense, providing an open world experience, which I think is very fascinating. So for those of you who are interested in Somnium Space, who want to learn a little bit more about the project, go ahead, follow them over on Twitter, check out their project. I think it's so cool here just to see people, again, continuing to expand the VR space, to be able to see how Somnium Space has been able to mold the world of both blockchain and cryptocurrency, blockchain and cryptocurrencies and NFTs and collectibles with the world of virtual reality, which I've gotten really excited about over the last few years. I think we're very much on the cusp. I know Artur and I talked about it. He's pretty much confident that we are on that cusp right now in the VR world, and that Somnium is one of the many projects leading the way. But I'd like to know what you guys think about this. What do you guys think about the VR space? What do you guys think about this world of NFTs and digital collectibles? What do you all think about the news we talked about earlier and the sense of traditional equity markets as well as cryptocurrency markets? Are you guys still bullish on altcoins at the moment? Do you think we're still going through the altcoin cycle? A lot of important questions to ask, but I'm going to wait and leave it up to you guys to determine what happens. That being said, though, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.